So we got your questions on inflation and I'm here to answer them. So let's just jump right into it. How is tariffs' impact on inflation still so limited, and is there more to come? I think this is a great question just because everything that we've been seeing, and I can think of two main reasons why we haven't seen such a big spike on inflation. Number one, even though the announced tariff rate is at around 17%, the implied tariff from US custom duties from June and July is at around 10%. And in second place, I would also say that the cost is being split. So US consumers, US businesses, and exporters are all pitching in, with US consumers paying about half of the higher cost. How have businesses bear the brunt of the costs of tariffs, and what can we expect? I guess it depends on who you're asking. If you take a look at large companies, you'll see that they have more flexibility in terms of their supply chains. They have less reliance on countries with very high tariffs, and they have more pricing power, which means that they can pass on higher costs onto consumers. On the other hand, smaller companies don't have the same flexibility in terms of supply chains. They have more exposure to countries like China, which have very high tariffs, and then they also don't have the same pricing power, which means that their profit margins are likely to get eroded. What do you see happening to the traditional portfolio of 60-40 with high inflation? Overall, we have a constructive view on risk assets, including equities and bonds. That said, whenever we've seen inflation rise above 3%, we've seen that the correlation between equities and bonds turns positive, which means that the diversification aspect that bonds bring to the table loses a little bit of its charm. We'd recommend investors to complement their 60-40 portfolios with alternatives such as infrastructure and gold to hedge against rising inflation. I hope this answers all your questions, and I'll see you again soon.